Hi traders and welcome, Lockie here. Welcome to the Samurai Day Trading Starter Pack video series. We are now going to be working through video number 2 as we're going to focus very heavily on the red house versus the green house, a concept that will actually help you differentiate between futures trading and Forex trading and why we do what we do. As once again, the video series is designed to cut through the hype, help you get informed, as ultimately help you understand what professional traders actually trade as opposed to what you may be told on the internet. So as in video pack number 2, what we're going to be doing is we'll do why futures not Forex and how do we target a 90% strike rate in the live trading room. So at Samurai Day Trading, guys, we trade futures as opposed to Forex. Now, why do we do this? It ultimately allows us to trade the largest and most lucrative markets in the world with 100% confidence and 100% transparency. Where do we get that from? Because the fact is that as futures traders, we trade directly to a futures exchange. We don't trade through a broker. And as a result, we have 100% transparency of price anywhere in the world. We can be confident about what we see, but we can also be even more confident that there's no one on the other side of the market deliberately manipulating the market against us every time we take a trade. Now, the market's available to us is basically anything that is worth trading, from oil, gold, coffee, sugar, wheat, cattle to the stock indexes. There's basically 70 markets around the world that we can trade. Every one of these markets is available to us. So we have a huge market selection and no one on the other side of the market trading against us, which gives us an incredible advantage over almost every other trader in the world. Now, any suggestion, mind you guys and girls, a lot of information out there on the internet. This video series is about cutting through the hype. So there's lots and lots of suggestion out there on the internet that Forex trading, CFD options trading, as is basically the same as futures trading. Everything goes up, everything goes down, and it's all basically the same. That's absolutely not the case. So if you don't mind, we're going to cut through that hype. What I'm going to do is introduce you to a concept called red house versus green house. I'm going to show you a graphic of how the actual market works so we can actually understand that if you want to develop a career as a professional trader, you have a far higher chance of succeeding as a samurai futures trader, guys, as a Forex trader or any other discipline when it comes to the game of trading. So a lot of people say, guys and girls, why futures trading? It's an absolutely wonderful question. As I want to introduce you to a concept called over-the-counter. So as a futures trader, you can trade the largest and most lucrative markets in the world while at the same time avoiding all forms of broker-initiated market manipulation. Guys, how do we do this? We simply do not trade over-the-counter. Now, ultimately, what does OTC mean? OTC is an acronym for over-the-counter. Over-the-counter trading involves you trading to and from your broker as opposed to trading to and from a centralized or regulated exchange. Now, the beauty of that, ladies and gents, as a futures trader, we always trade to the futures exchange. As a futures trader, we are the only people in the world that have access to that futures exchange. It means that we can avoid all forms of brokers. Forex brokers, we avoid them. CFD brokers, we avoid them. Options brokers, stock brokers, we avoid all of these brokers. As the whole intent is we want to get on with the job of being professional traders, making a lot of money, as opposed to trading a market that can be manipulated against us. Ultimately, what does that mean for you as a professional trader? Let's explore this issue further. Goes on, I'll literally introduce you to a concept called the greenhouse versus the red house. And once again, we're going to cut through the hype. We're going to build your knowledge and your expertise around this thing called professional trading. Now, why not Forex, CFDs, options, or binary options? All 4 of these markets are artificially manufactured markets created by your broker. This is why your OTC broker used to be called a market maker. They literally created the market for you and invited you to come and have a trade. These brokers literally borrow price data from the stock exchange or another broker, rebadge that information, pretend it is their own, and then sell it to you through a free trading platform that they gifted to you. Now, guys, there's many free trading platforms around the world. You've got to be very careful when your broker offers you a free trading platform, what that actually enables them to do. Now, the first problem that gets created is quite serious. Because this type of market design means your broker controls the price of the market you see on your trading charts. Ultimately, they will give you the price they think you need to see which may have no correlation whatsoever to the price of the market in the real world at the time you're trading. Because problem number one, if you're trading through a broker, your broker can actually give you a completely fake price for the market you're trading, and you have absolutely no way of determining whether that information is real or fake. Now, problem number two is this type of market design means your broker knows the exact size of your trading account. They also know your trade entry point, your stop loss location, the target on your trade, and your likely risk control strategy. Now, how do they know this? It's basically you are using a free trading platform that they gave to you. As a result, they know everything about your trade, and as a result have the freedom to manipulate your trade against you, because ultimately they provide you with the price data you're trading. What does this ultimately mean, ladies and gents? They have the option to push the market against you. So you might have a bank of winning trades and think, wow, this is amazing. I'm going to retire shortly and become a professional trader. And then suddenly the market bounces against you really badly, blows you out of the water, and you got to go and start again. Many Forex traders, guys, that I'm working with now that have switched to futures, have actually told me this exact story, saying, Lockie, I was going really well, 2 or 3 months worth of great trading. I started increasing the value of my account, and then suddenly, boom, in one go, my account was blown out of the water. I don't understand why. Well, the reason the brokers can do this, ladies and gents, is because you're ultimately stuck in the red house. Now, all of the Forex traders globally are forced into the red house, as a lot of people don't even know the red house exists. As the whole point of this video series is to cut through the hype and help get you informed. So let me introduce you. Again, on the left-hand side, we've got the greenhouse. That's where all the futures traders globally hang out. It's a really lovely spot to hang out. And over there on the right-hand side, we've got the red house. Let's break this down a little bit, guys, so you can walk away from the video going, wow, this was incredible. So over there on the left-hand side, we've got exchange-traded futures. Now, ultimately, they're traded on futures exchanges like the CME, which stands for the Chicago Mercantile Exchange. So the CME is 100% regulated, 100% transparency of all market prices gifted to anybody, guys, that plugs into the futures exchange. And ultimately, there is no one that can intentionally trade the market against you, full stop, end of story. There are no market participants, if you will, that know where your trade is and can ultimately push the market against you. Now, over there on the right-hand side, ladies and gents, in comparison, we've got the red house. That includes the OTC or over-the-counter markets, including Forex, binary options, CFDs, and options. Now, the problem with the red house, ladies and gents, it's traded to and from your broker only. What does that ultimately mean? Your broker has 100% control of what you see on your trading screen. That trading screen and the price that you're given by your broker may have absolutely nothing to do with the real market price of the market you're trading. And ultimately also your broker has the opportunity to trade against you whenever they choose. So guys and girls, not to be rude, but if you're trading in the red house, you're trading in a manufactured market that's artificially manufactured by your broker, and you're literally invited to come and have a play in what could be a completely fake market. Now, some of you may be thinking, Lockie, how could this be possible? How could this be fair? How could this be allowed? How could this be ethical? The number one problem, ladies and gents, faced is down there, bottom right-hand corner. Your broker may choose to trade the market against you whenever they choose. Now, it brings up a really interesting point, ladies and gents, because once again, we're cutting through the hype. There's a lot of hype out there that basically says Forex trading is the same as futures, same as CFDs. Guys and girls, may I suggest it could not be further from the truth. The reason being is that as a futures trader myself, I don't trade with a broker. Therefore, there is no broker in the market to actively trade the market against me. Whereas if I was in the red house, I would be facing exactly the opposite scenario. So for the purpose of transparency, ladies and gents, let's actually look at a market design schematic. And what we're going to do is we're going to put the greenhouse in the middle. We're going to put the traders over there on the left-hand side, and we're going to put the Chicago Mercantile Exchange over there on the right. What we're going to do is actually watch your trade move in and out of the market to understand why futures trading is in fact a dynamite shift and improvement away from Forex. So let me build this schematic for you, ladies and gents, by basically putting a number of arrows on the screen. So as a futures trader, all critical market information that appears on your trading charts comes directly to you from the futures exchange with no one in the way. Now, when you place your trade, you're placing your trade directly back to the futures exchange. Once again, there is no one in the way. The role of the clearinghouse is to simply give you permission to trade. So when I take a trade this afternoon during the European Open, they will simply say, does Lockie have enough money in his account to take this trade safely? Whereas that process normally takes around about half a millisecond. Suffice to say, permission is granted and the trade is on. Please note, there is no one between me and the futures exchange to manipulate the market against me while I'm trading. What does this mean? The price of the market I am trading is defined by the futures exchange. It is not defined by a third party like an OTC broker. Hence, the price information I see on my computer is pure and unfiltered information that I can trust when I'm taking a trade. As this is how we target a plus 90% strike rate, because we have 100% transparency of every aspect of the market we need as in order to be great traders. Ultimately, why do we not trade in the red house? The first reason, ladies and gents, we don't trade in the red house is, as a Forex trader, I don't have access to the futures exchange. Instead, I have access to either a broker or a broker network, or I've got access to a normal stock exchange, but it must be via the broker. The problem that creates is very, very simple, ladies and gents. Let me build these arrows for you. All critical market information is given to your OTC broker by the stock exchange or the other brokers. It is not given directly to you. I wanted to highlight directly to you. There's no such thing, guys, as a direct data feed from the stock exchange through a broker to yourself. What then occurs is the broker then decides what information you need to see and also what information you don't need to see. Now, I wonder why they would do that. Well, of course, they have the opportunity to trade against you if they choose. When you place your trade back to the broker. And ultimately, the broker's got two choices. The broker can manipulate the price of the market you're trading using a price spread and then pass you onto the broker network or onto the exchange. Or the broker, ladies and gents, may choose to do something a little bit evil, which is called take you on. Now, you can Google this if you want, ladies and gents. It's literally broker language for trade against you. Ultimately, what does it mean? You lose, they win, or vice versa, and the game continues. The problem with this market model, ladies and gents, down the bottom in red is very clear. The OTC broker can control or manipulate every piece of information you see on your trading screen, including the price of the market you're trading, the volume, the liquidity, the movement of the market, the works. If you're a Forex trader, guys, for example, trading the Aussie dollar, your Forex broker can make the Aussie dollar go up on your screen when in actual fact it's going down in reality. How do they do this? They control the price of the market you're trading, and the price they give you may have absolutely nothing to do with reality in the real world. Now, what does this mean, ladies and gents? A whole lot of people out there in the world who don't think day trading works. Now, may I be so bold? Day trading in the game of Forex doesn't work for the majority of traders, not because the traders are bad people, but because at the end of the day, they're trading in a market environment of which they have no control over the manipulation against them while they're trading. Because it's got nothing to do with the trader or the fact that, this person's a bad person. Simply being, if you don't mind, the actual design of the market they're trading in the red house is fundamentally flawed in favor of the broker and not in favor of the trader. You can probably imagine, ladies and gents, why we are not Forex traders, while we hang out in the greenhouse instead. So I do want to highlight the points, guys and girls, on this particular slide if I can. The most heavily marketed trading methods in the world include Forex options, binary options, CFDs, and shares. They are also the most heavily manipulated trading methodologies in the world. Now that's it, guys. You are trading to and from a broker that you are forced to use. The price of the market is 100% controlled by the broker. Therefore, you don't actually know whether you're being given the right price. Every aspect of the market can be manipulated by the broker and ultimately traded against you. A great question. As if there were 2,000 different Forex brokers globally, understanding the price of the market is defined by your broker, not a global exchange. There may be 2,000 different prices with the Aussie dollar, US dollar, euro, gold, oil, all at the same time. As a professional trader, how do you know you're getting the right price? The problem is you don't and you never will, is because at the end of the day, the entire market environment you're trading in is manufactured by a broker that used to be called a market maker. The problem with this game, ladies and gents, and one of the key reasons why I'm a futures trader versus a Forex trader is very simple. In the futures trading game, it's a two-team game, buyers versus sellers, and the stronger team has to win. It's a very, very simple game to play. In the game of Forex, it's a three-team game. It's the buyers versus the sellers versus the broker, and the stronger team has to win. But the broker controls the price of the market you're trading. So guys and girls, it doesn't take a rocket scientist to work out who's going to be the stronger one there. So in futures, it's buyers versus sellers and the stronger team has to win. In Forex, it's buyers versus sellers versus the broker, and the broker controls the market you're trading. So I wonder who's going to win that. As may I suggest, as you've got a choice, if you don't mind. As the choice is really, really simple. You've got the opportunity of becoming a futures trader, so you can actually trade a market that is 100% protected against all forms of deliberate market manipulation, or you can be a Forex trader as in trade in a market environment that is open to all forms of deliberate manipulation. Now, I wonder which one, guys. I wonder which one is going to be easier to master. Suffice to say, guys, as a futures trader, I do believe I'm in the right place, guys, so much so I've just written a book. It is completely free, as it's available on the Samurai website called Brokers Exposed. If you want to do some research, guys, into the different designs of market and why we are futures traders versus Forex traders, guys, that is a great book to jump on. So it's free, guys, download it off the website, ready to rock and roll. Guys, and we will now move on to the next chapter. We're going to break down what we do a little bit further. Guys, I'm going to do a capital projection for you. We'll set a KPI of $100 per day and see what that looks like over 2 to 3 years. We'll start to look at some charts. We'll start to look at some indicators. Guys, we'll start to introduce you to the world of day trading with Samurai Day Trading. So, guys, without any further delay, let's move on to the next video.